You never know what's going to happen on question time, but what we do know is that Steve Brennan always has a question for Joe. Steve?
Well, yesterday, Joe, we were talking a little bit about the Magnificent Seven, and lately, legendary value investor Warren Buffett's in the news for selling a large amount of his Apple stake. Wanted to get your take, your reaction on Buffett moving away from Apple.
Well, first thing I would say is that I don't really think of Warren Buffett as a value investor anymore. He hasn't been a value investor for quite a long time, actually. If you go back to his original partnership and when he was investing in the 70s, maybe he was a value investor. I mean, his original hedge fund, which he ran back in the 50s and 60s, he used to say they were buying what they called cigar stubs. They were buying bad companies, but the assets were worth more, so they would buy them when the price of the stock, they could buy the assets on the cheap and hope that the value of the stock would rise to meet the asset value, and it usually did. You don't find those kind of things anymore. And his original, if you go back and look at Graham and Dodd back at the old, the guy he learned from, those types of stocks just don't exist anymore. In the late 70s into the 80s, and really mostly in the 80s, I would say, Warren Buffett turned into what I would call a quality investor. And that was driven, I think, in a lot of ways by Charlie Munger, who told him, look, this value thing is, why buy bad companies hoping that they're going to go up so you can get the asset value? Why not just buy good companies at good prices? And that's what he's done. I mean, the classic example of that is Coca-Cola, which he bought way back in the 80s. And so he did not buy that as a value stock. It was not that cheap when he bought it. So he's a high quality investor, and Apple fits that bill. Apple's a high quality company, high return on equity, high return on invested capital, and so forth. But it is not a cheap stock. It's a very expensive stock. In fact, 30 times earnings, 30 times next year's estimate of earnings, 28 times cash flow, which is kind of stunning. And I think something that maybe a lot of people don't know, there's been no growth at Apple for almost 3 years now. Revenue in 2021 was $365 billion, and it's $385 now. So it's just not that. It's not as big as you think it, or it's not growing as fast as people think it is. Now, let me give a caveat, or not a caveat, but a disclosure. We do have clients who own Apple. In fact, we have some clients who own a lot of Apple. Most of them bought it, though, many, 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 many years ago. As a firm, we first bought the stock in 2013, and we have some clients who actually have owned it longer than that. And in one particular case, has rarely sold a share. And at this point, it's in a taxable account. The tax hit is kind of huge. So we do own the stock. We're not actively buying it. And we've trimmed our position over the years too, just as Warren Buffett has. And I think that's what you got to take from this. He owns a high quality company. The position got too large. It's gone up a lot since he bought it. He trimmed the position. I don't think it's any more than that. And again, listen, I'm an Apple guy. I love Apple products. In fact, I just was in the Apple store over the weekend and bought some new AirPods. And I'm a big believer in the way Apple does business. I think one of the things that is really, really interesting about Apple is how they package their products. Even everything, attention to detail, everything is done to a T. And if you've ever bought an Apple product, you know what I mean about the packaging. They could do it a lot cheaper, but they want it to be right, and it is an experience. My daughter, just for disclosure, my daughter worked at Apple from high school through grad school. So. And collected a lot of Apple stock along the way, and still owns some too. So and I own some too. So it's owned in the family. So just full disclosure, we love the company. We're not crazy about the stock price, and I think that's probably where Warren Buffett is too. Listen, if you're owning the stock, I wouldn't get too worried about it. I mean, there's a new iPhone cycle coming up. Apple will move slowly on artificial intelligence as they move slowly on everything. So I don't think you have to worry about them breaking the bank on that. And Apple's one of those companies, they get in a new business and it takes them a while to figure out how to do it, and they end up dominating it. And they've got some issues, I think, with Well, take an example, Apple TV, Apple Plus TV. Everybody's kind of looking at it and going, "What is this?" And suddenly they're winning Emmys all over the place. And it's not a hugely profitable business, but it's a good one. Anyway, like I said, I love the company. I'm not crazy about the stock price. You want to keep it in a reasonable size position in your portfolio. And that's about it. Like I said, I wouldn't worry about Buffett too much. He still owns a bunch. So he's certainly not rooting for the stock to go down.
What questions do you have for Joe? Be sure you put them in the comments section down below.